even if I'm trying to coach or teach someone, like it's still not enough, and you have to be able to coach yourself.
The main thing is just really focusing your energy on where the highest like EV is going to be. Where is your time going to be best spent to give you the biggest improvements in your overall trading?
Hey, what's up, everyone? Welcome back to another episode of Trading Takes, presented to you by Investors Underground, the show where we break down the market's mindset and mechanics of elite trading. I'm your host, Sam, and tonight we have two incredibly talented traders joining us, guys who personify hard work, discipline, and the relentless pursuit of improvement. Tim Grover once shared a story about Michael Jordan. After every game, win or lose, I'd ask one simple question: 5, 6, or 7, as in, what time are we hitting the gym? No debate, no excuses, just a decision. No matter how he felt, Jordan showed up before everyone else, putting in the work. Now, isn't it funny how often the most talented are also the hardest working? Trading's no different. The best don't just rely on talent. They review, they refine, and they improve every single day. Tonight's guests, laptop legend David Hanlin and Kyle Williams, personify this mindset. And with it, they've made over 8 figures between them. And that's exactly what we're diving into tonight. Why reviews might be the key to leveling up your trading, how to get the most out of them, and the habits that separate the pros from the rest. If you're serious about improving your edge, this is an episode you don't want to miss. Now let's get into it. Kyle Williams, and we've got the laptop legend David. How you both doing?
Doing good.
Doing good.
Fantastic.
Good. And Kyle, why don't you have like some cool nickname like the laptop legend? Or you're just Kyle.
I know that was, and I learned laptop legend was a multi-purpose name because laptop was a drop shipping before trading.
Yeah, I was a dropshipping guru.
Oh,
that just fit perfectly. Just anything on the laptop, he was a legend at, and
Yeah,
I'm just
cranking it out.
Kyle.
I was genuinely thinking this earlier, and I'm sorry if you've covered it elsewhere, but I was thinking, did you? Because I thought you called yourself a legend kind of at trading before you'd even like started trading. I mean, obviously you've turned out to be a legend, so like the name fits. But there must have been points in your career where like you're like, I'm not quite sure I deserve the legend title yet.
Yeah, and it was just I started originally for like e-commerce, but I didn't want to like box myself into just being e-commerce. I had a bunch of friends who were like, e-commerce Devin, e-commerce Leo as their handle, and I didn't want to be e-commerce David and then never be able to move past e-commerce. So I just went with the laptop legend, and but I don't know. People think it's like I think I'm a legend. It's not. It's just I like alliteration, and I thought it was a cool name.
It is a cool name, and either way, it doesn't matter now because it fits. So it's perfect. So as we were just discussing off air, one of the things that one of the most powerful things, and something that I've always thought about, is how often some of the best athletes, who people say are the most talented athletes, they're also the hardworking. And I touched on in the intro, Grover talking about Jordan, how after a win or a loss, you'd always ask him one question, and it would be 6 or 7 in the morning, and that was, what time would they go to the gym? And he ends that comment talking about, isn't it funny that the most talented athlete in the world, arguably, is also the hardest working as well? And I think of it exactly the same when it comes to trading. Like, I look at you guys with your in-depth reviews. I look at how Lance is so in-depth with his reviews, and then also the best traders as well. And success absolutely just leaves so many clues, and that's really what I want to unfold today. And so, Carl, firstly, to kick things off, why is reviewing so important?
I'm in the boat of like I don't know how you can't review. In the sense of like if I lived a world where I didn't review or didn't reflect or didn't try to improve on what on earth I was trying to do, I would feel like naked. I'd feel blind. Like the whole point is to get some kind of level of understanding around what you're doing, what you did right, what you did wrong, and to be your own coach, because it's not really. I mean, yeah, there's plenty of education online and services that are great out there, but even I always tell this, like even say take me for example as a teacher, I could teach some newer trader the top 10 lessons of trading, but it's almost guaranteed all 10 of those they will have to live through themselves to then finally be like, oh, that's what Kyle meant. So even if I'm trying to coach or teach someone, like it's still not enough, and you have to be able to coach yourself. And I think that's at its core what reviewing and getting good at reviewing does.
Absolutely. And David, why is reviewing so important to you?
I mean, I agree with what Kyle said. I think those lessons don't really stick home until you learn them for yourself and you experience things multiple times and it gets burned into your memory through repetition, muscle memory, whatever you want to call it. And so by going back and reviewing your trades, you're able to learn from your past mistakes or um, your past wins and really identify the nuances that make a setup great or make a setup not great, and just use that to make a better decision in the future. And if you just kind of blindly go along in your trading journey, taking trades, but not going back and reviewing, you don't really have an ability to improve on, the past. And whether that's your own trades or the trades of, all the other amazing traders we have in our community who provide these trade reviews, et cetera, for us to, go back and look at on our own time.
Yeah, absolutely. And do you think how fair do you think it is that it help, the doing review can help you identify both strengths and weaknesses? And also, and I think also, well, it can be a bit of a shortcut to include, actually, I shouldn't be trading this setup, or B, I should be trading this setup more with bigger size, etc. How fair do you think that comment is? Carl, you go first. Sorry, I'll mix it up. We'll mix it up with you two. Sorry.
Okay. Yeah. So I think back to as a beginning trader who doesn't even know what they want to do as a trader yet, right? You're kind of like this little infant, and I don't know, I would make this funny now. Like you're like an infant in the forest, just like making your way, and you have just no idea what you're doing, right? And so the it's really kind of janky, but the only real way I've found that maybe people get a grip of it is like you're testing and tinkering small size on any trade you see. And I look back and feel so dumb that I did this, but it's really the only way I maybe kind of stumbled upon what I wanted to do, which was I was buying things that went up, I was buying things that went down, and I shorting things that went down. I have no idea what I was actually doing, but once eventually I got enough trades underneath my belt, I was able to see like, okay, well, where was there any glimpse of success or any glimpse of me making a trade plan and actually being correct or being just dead wrong? And then that's really what started me to review, is because if I don't do that, I'm just blind walking along through life or through trading. And I started to narrow down, like, where am I actually like having a read, like a correct read on things, and where am I actually following trade plans and making things happen and actually finding some success, even if it's one profitable trade, versus the ones that I'm maybe just gambling around, right? Because it's very easy early on to make a profitable trade and think you knew or did something right. But once you really review and dive deep, then you can start to maybe dissect it. Like, did I actually know what I was doing, or did I just get lucky? I remember one of my first biggest trades, I made like $500. And as I continued to learn how to review, I looked back and I was like, yeah, it was a complete gamble and I just got lucky. I had no idea what actually happened. I just happened to catch a gap up on I was long, um, so that's really the beginning stages of me reviewing and tinkering there, because that's where, to take it long story short, to answer your question, like, how do you know you have a sub or not? It's like, once I've reviewed enough and I know exactly what is, a right trade plan and what is a wrong trade plan and what a setup needs and doesn't need. Now I can say very objectively, okay, does this stock have, A through Z criteria? No? Okay, great. I don't take the trade. Very simple like that. So
yeah. And yeah, I think that's so powerful. And I remember early when I first started reviewing, one of the easiest and most simple ways for me to review was, could I name this setup? And often actually, like, there would be an occasion where if I couldn't name it, I instantly knew that was a random trade. And I like had really simple goals actually in the early days of, let's just have a month of nothing going in random. And I always say to people, whenever someone questions me and says, I've got this set up, the most simple question I always ask them is, have you got a name for it? And I never care about the name. I don't care if they call it, I don't know, my dog's downstairs. I don't know what they want to, I don't care what they call it. But as long as they've thought about it and gone, okay, that's the setup, that just means so much to me. And I'm like, okay, you've actually thought about this. This is something you reviewed. And this is something that I think you can put into practice moving forward. And David, like, do you think there's a connection then between those that review and long-term survivability and profitability?
I think that you can't even argue that fact. The market's constantly changing, and there are patterns that continue to work, but overall, it's always changing in general. And so, if you're not reviewing and staying on top of how the market is changing, you're not going to be able to continue to be profitable as things move forward. And this market is shifting right now, as we can see based off of how hard it is to get certain stuff to bounce and all those things. And just me reviewing, for example, on the Tesla trade today, I was going for bounce on it, and looking back, I can't really call this a capitulation trade because it doesn't really meet the criteria. So this is one that I already reviewed today and realized that like it really didn't fit my criteria, and I probably should not have taken it in the way that I did. And I think if people take the time to go back and look at their trades, and like you were saying, make sure that it actually has a setup and it meets the setup, you could name the setup, etc., and you have past examples of this setup working, then that really is going to make you be able to be more successful with your trading in the future.
Yes, and what I love, like we spoke, it must have been a few weeks ago now. It was I think it was back after Jensen's comments about quantum, and we were talking about RGTI, and I asked you, I remember, did you trade this capitulation? And you had like a really solid justification as to why you did not. And I think again, that just further strengthens your bow as to actually, this doesn't fit my criteria. Yeah, it may have worked, but I also think that's a really important part of review as well, because I think it's so easy to go, I don't know, like someone might say, oh, Tesla faded today, I should have been short all day. But I always think that's going to be like it's going to be really tough to be a long-term successful trader if you're just randomly hindsight going, I should have done this, I should have done that, without any criteria. Like, should you, I don't know, maybe you should have been short Tesla today, right? Obviously it finished at low, so maybe that would have been a good thing. But it doesn't mean it makes a good trade. So perhaps just touch on then about some of that criteria. And like you touched on there, David, about capitulation. So, and you don't have to be too specific, but I mean, just perhaps some examples of what you're looking for and how you can treat every trade in exactly the same manner.
Well, yeah, I mean, just to elaborate a little bit on what I was mentioning there, in general, on a capitulation trade, you want to see increasing range on, as many time frames as possible, and increasing volume as well. And, just looking, if I pull up the Tesla chart, like the last few days, on the daily chart, to me, what I see is like, I see decreasing range and volume that is also kind of decreasing. I mean, today is slightly bigger than yesterday, but like the range has gotten smaller over the last 3 days. And just because it's had 6 red candles in a row, like that doesn't meet the criteria. And I guess kind of the thesis for wanting to be long is like, well, I think it might go up because it's had this many red days in a row. But it's very easy to say that for any setup, and there's no edge there, in my opinion. So I just need to be a little bit more picky, and make sure that I'm getting something that has expanding volume, expanding range if I'm going for a capitulation trade. Something like that August 5th dip buy, that Lance absolutely nailed.
Yeah, yeah, I remember that. Yeah, absolutely. I think we're, just for context, we're recording on the 27th of Feb. I think Kyle's actually still long Tesla, so you might just be talking about his trade now, actually, with that.
Yeah,
I mean, it definitely could bounce, but yeah.
Yeah, no, but in some cases I do agree with Laptop, where it's almost like where I grade them, where I do think Tesla's due for a bounce, but I understand the criteria or the way it could be better. And if it did look better, let's say tomorrow it does look better, then the expectancy or how good I think the bounce should play out increases, right? So like right now, my confidence in it bouncing tomorrow is like 10%, but I'm just trying to stick to the trade plan of like, hey, I have a stop in, and until I get stopped out, we're gonna let it trade out. But yeah, I agree. It's like, it's not that good. It could be better, so
it's great that you both know that it could be better because of the power of reviewing better trades previously. And I think that's interesting. So recently he had Jeff Holden on from SMB Capital, and like one of the things he spoke about as well, like you have to be able to identify when something transitions from like a B or a C grade setup. Like we might have a B or a C today, could work, and you should be taking that trade. We might get the bigger A grade tomorrow, which I mean, I can't trade tomorrow, unfortunately, but yeah, which is always typical. I'm always flying on a good day.
Thank you for your sacrifice.
Yeah, anything for you, laptop. And I just want to touch on like some pitfalls, like the pitfalls of not reviewing trades. And I think like one of the biggest issues that I see is any sort of emotional or unconscious trading, or I think it's going to do this, and it's just like some sort of idea trading. I don't know if you guys want to add any other pitfalls, but just like to share your thoughts on particularly like that emotional side of trading if you haven't done the review. David, you can go first this time because I've been picking on Kyle first every time.
Pitfalls of not reviewing trades. I think, I mean, it's kind of the same idea that we've been talking about, but if you're not reviewing trades, you're not improving, you're not adapting, and the market just continues to get more and more competitive, in my opinion. So I just don't have a whole lot to add there. Basically, you're just going to be left in the dust if you're not reviewing your trades.
Yeah, I mean, there may be nothing to add, Kyle. I don't know if you got any thoughts you want to add on to that.
Yeah, not necessarily not or a factor to consider is I've seen people in their defense to not reviewing. They'll reference some trader who doesn't review maybe as intently as like maybe me or David do, or they don't review how 99% of traders review, or they like have a videographic memory, so they like just remember all of the lessons they're learning, and they're like that's just how they operate. I've just seen traders maybe make that mistake of like, well, he does it, so I can do it. And it's like, yeah, and LeBron James has scored 40,000 points in the NBA. Like that doesn't mean I can do it, right? Like you kind of have to own up to that. You're not going to be the chance of you being that guy who doesn't have to review to be good. Like it's like an excuse to not review, So if like you have any hesitancy to review, like you're already in the right or already in the wrong frame of mind, it's a necessary thing to do. And if you don't do it, then, good luck. Right. So,
yeah, no, I agree. And like, I always think about the guys like the Nates of the world, like Ariel of the world, the way that they just can like recall tickets and be like, oh, this, like, in the way that like just laptop just did, oh, August the 5th, this happened. I'm not one of those guys who can like just suddenly call upon it like that. And I just know that actually for me, the only way around it is I just have to work hard. I don't know. I don't have another solution yet. I wish I was one of those guys who didn't need to review, because I mean, it takes up time that it could be spent doing other things, but that just happens to be the case. But why then do you think people don't review? Does it come down as simple? Is it as simple as laziness, Kyle?
In some people, yeah. The one area where I could see people not reviewing, and this is where the line is drawn, where for me, you don't want to spend too much time reviewing. And what I mean by that is like, if you take a single trade, and you're spending an hour plus on that single trade, and you got 6 other trades for the day to review, like, yeah, you're gonna give up just by the sheer fact of you don't have that much time in a day. So you kind of have to make it a process where you keep it precise enough to where you get something out of it. But right, you're not spending so much time to where it becomes such energy intensive that you're not motivated to like, or the energy spent to review now outweighs the benefit you get from reviewing in the first place.
Yeah.
Right. So I've seen that before where it's like someone just overdoes it on reviewing. It's like, yeah, of course you don't want to review 3 days in a row. Like you just spent 10 hours doing so. Like, of course, no one wants to do that. So there's that fine line of where you want to review enough, but you don't need to just, pound into the ground of, I have to gain every little piece of information about this review and this trader, or else I'm going to suck. Like, it doesn't have to be that serious. It just needs to make sure it happens at some efficient level.
Yeah. And David, is it laziness? And anything to add to that?
Yeah. I mean, I think just to add to that a little bit, I think the whole goal with reviewing stuff is to make sure that you're always improving. But obviously, there's a finite amount of time in any given day. And so you kind of have to pick your spots, because depending on the type of trader you are, and if it's a super busy day or busy market, or you have other stuff going on, I mean, you could take 10 plus trades in a day and then have stuff after the market and maybe not have time to review super well. So I think the main thing is just really focusing your energy on where the highest like EV is going to be. Where is your time going to be best spent to give you the biggest improvements in your overall trading? And for me, like maybe this isn't the right way to do it, but typically I review the most on like really good setups that I fumbled or I crushed, and then on setups that I like, traded really poorly. There's a lot of like kind of mediocre chaff in the middle where it's just like, to me, it's kind of noise. And maybe those trades, if I took the time to review them, maybe it could make a huge difference. But for me, I feel like they just kind of average out to maybe about break even over the course of my career. Maybe that's like 50, 60, 70% of my trades. And I just don't feel like reviewing those trades is really the best use of my time, given that I'm married and, I have other stuff outside of trading that I like to do in my life. But really just reviewing those kind of outlier trades, whether you nailed the opportunity, you fumbled the opportunity, you got crushed on the opportunity, whatever it was, I think those are the real ones that are worth spending your time on. So, if someone doesn't review, maybe they just kind of get lost in the noise and they're like, well, I don't see any improvements because I'm spending all my time on, the stuff that doesn't really matter. So I think it's really choosing your spots and how you review it.
Yeah, I think it's such a fine line between not reviewing and then what's the phrase? Paralysis by analysis as well, because there is definitely a point where you can I think particularly when you're focused on one ticker, it would be very easy to overanalyze that, and then actually that can lead to perhaps some negative habits moving forward. But I do think, like, to your point there, David, like one of the things that I've always found is like on my big losses, I think like just like a simple question for me anyway, like how could I make that loss smaller? And for my big trades or decent trades, it's like how could I have made those bigger? And I think they're just two quite simple questions that I try and just pose to myself. Kyle, are you treating every trade the same, or do you like does some have a greater weighting?
As David was speaking there, it did make me think as well. Like, yeah, there are a good handful of trades where I wouldn't say don't review them, but the review could take 30 seconds. It could be like, here's a setup, I took it, I followed my trade plan, it turned out this way, and that's that, right? There was no mistakes made, there was no need to improve. It was just, hey, this is how it went. Win or loss, I did what I was supposed to do, and I'm gonna move on, right? I do agree. It's the ones that are either you made a big mistake, you broke a certain rule that led to losing more money or not making as much money as you should have. It's reviewing the charts that are once in a year kind of plays. It's those maybe more special or maybe just setups that you're really good at, right? Like I probably have somewhere in like the 8 to 10 setup ranges, but really like maybe 3 to 4 of those 10 are ones that really move the needles in my account most of the time. So like those ones I'm maybe spending more time on. It's different for everybody, but that's kind of where I maybe spend, like David said, like really think about where most of your time should be spent. And like you said, for a lot of trades, they're just like, okay, great, 30 seconds, boom, check, it looks good, move on. It doesn't have, and last thing I'll say is that gets quicker over time as well, right? Me being almost 9 years in, I can do that quickly because I've taken maybe this one trade 100+ times. So there's nothing for me to improve on. It might be more front loaded as a beginner because you're just trying to figure out, is this even a trade I should have taken? Like you're not necessarily comfortable or how familiar with it as someone who's taken 3,000 trades versus your first 300 trades. So it can be very front end loaded, but eventually over time, the efficiency and the time spent should start getting a little bit more faster pace.
Yeah, absolutely. Well, I think like we're certainly the choir preaching to the choir when it comes to is reviewing important. And that was one of the reasons why like I really wanted to obviously host this topic on trading takes. Like I haven't heard anyone, the only person I really, well, going back a couple years ago at Traders for a Cause, it was a real strong topic from Lance and Greg Shabika as well. And like that was probably the key message, actually. That would be 2023, after coming away, like these legends of the game, they just go through tens of thousands of charts, like in decent detail to come up with their system. And again, that was one of the whole reasons why, I wanted to host this episode. So I think we can all agree they're worthwhile and a good use of time. Just to open it up then, like as a baseline, David, when you're coming to review, where are you starting? Like, what's your sort of 3 or 4 step process to break down a trade that you've taken?
If I do like an in-depth review, I want to put it in an Evernote folder, and I'll take a screenshot of all the different time frames of the charts that I think are relevant. Usually that includes the daily, the 1 minute, and then, you know, depending on what it is, maybe sometimes the 1 hour or like the 15-minute chart. And then I put my executions in there, and I'll just go into detail and into anything that I really think is relevant, whether that's overall market conditions or whether the stock had news. You know, uh, I'm just trying to think of other stuff. I know there's a ton of, I mean, like other setups in the past that, you know, I think are super, super similar to this one, you know, similar to the recall stuff that Nate does, where he's like, this ticker is doing what this ticker did 37 years ago. And,
in 1987, this happened on this day.
And I think it's important to have every minute detail in there that can potentially give you a little bit of a clue as to what a stock could do in the future. And I love writing down all of those things. Just anything that could potentially be relevant.
By the way, we're definitely going to clip that up, and I'm going to do my best to make sure it goes viral. Just calling Nate old, and will never be a bad joke. Kyle, is that kind of similar for you? I think you're more of an Excel guy than Evernote, but
yeah. So a lot of similarities there with David. So I will at first, and I do this every day, and I actually did this at Mark and Close before we started hopping on this call. I obviously record it. So I'll put the ticker, the exchange, you know, my average in, my average out, whether it's short or long, the broker I used it at, the date, and then obviously that naturally then gets me, you know, how much I made, how much I lost, etc. I'll then do this on pretty much all of my trades. On the ones that, like I said, where they're like nothing good, nothing bad happened, I can just move on in 30 seconds. I won't necessarily do this entire process, but for the ones that I really want to review on like the best or the worst setups or trades, it first starts off with me just explaining what on earth happened, right? It's like, it's this setup. I gave it 2 tries. The first try was lost. Second try was a win, or it only took 1 attempt, and this is how it was feeling, you know, or it panicked more than I thought. Just, you know, doesn't be too long, but, you know, maybe a good paragraph of just the summary of what the trade is. Then in the next column of like this Excel on this particular trade, I'll then do, okay, what did I do right in the trade? And then what did I do wrong? So, and sometimes there's a bunch, sometimes there's very little. Like what I did right, stuck to my trade plan, even though I was very emotional and didn't want to, or stopped out where I should have and didn't change my trade plan in the real time, or wrong is I broke this rule and here's why I broke it, kind of thing. And then on the third column, I'll write, well, how do I continue what I did right? And then how will I refrain or stop doing from what I did wrong? So, you know, keep staying logical in the trade and don't be emotional and stick to your trade plan to keep doing that correctly. You know, if I broke this rule, it was because I was too oversized. Make sure you're following, you know, correct sizing next trade, kind of thing. And I'll do that for, again, like I said, any trade that I think is super, super important. And that's the kind of the refinery process of review, or kind of just always and going back to those trades. Like, you know, did I follow the next week of trades? Did I break that same rule that I broke last week, kind of thing?
yeah.
And then, like David said, I'll take a picture of the chart. However, I won't. David's little star play plus student there. I don't take pictures of the daily chart. I only take pictures of the intraday candles. But I probably, that's a good idea, because only if the stock ever goes away, then I don't have the daily anymore. But
Yeah,
considering
that's happened to me too
track
many
the
times
date,
on stuff. So
really, okay.
reverse splits and everything. So it's just nice to be able to have that. You know, when you're looking back on tickers that are 2, 3, 4, 5 years old now, no longer exist, or it says they used to trade at $3 billion a share.
Yeah,
Cough, MULN, cough.
Like Mullen or something. Yeah.
Yeah.
Right. No, that makes a lot of sense. And in terms of like documenting your like mental state in the morning, whether you, I don't know, like had a good night's sleep or been to the whatever, do you go into any detail on that, Kyle?
You know, I typically don't, but only because I've found that it doesn't affect me all of that much. Like I've had days where life gets busy and I've only been able to get 6 hours of sleep, and I've had days where I've gotten a great 8, you know, a great 9. And I haven't maybe found a pattern in the sense that it drastically affects my my trading. I would say one of the more, besides sleep, one of them is like if I'm traveling or not. So it's like if I'm mobile trading, I'll write that down. Or if I'm, on my, I'm always on my laptop, but it's either my laptop connected to these huge monitors in front of me, or I just have my laptop. Like this last or this Monday, so a few days ago, I only had my laptop, and there was like 7 different trades I wanted to take, and of course my laptop doesn't have the screen space for it, and so I missed like 80% of my trades just because I didn't have the bandwidth or the mental capacity to look at one screen and flip through 7 charts at one time. So I wrote that down. Like that's the kind of thing. So those details can matter. You just need to find which ones affect you more than others.
Yeah, and yeah, for sure. And laptop, I know you like to track your sleep. I've seen you and lads comparing sleep scores and talking about that. Is that something that comes into your review process as well?
So when I started this year doing the daily report cards, I started putting in there like what my sleep score was, whether or not I took the time to do stuff for my health. Like I like to go for a walk in the morning, get some sunlight, get some steps in. And so I do put all that stuff in there, but that's just on the daily report card. I guess I haven't added that to like a specific trade review. It's weird. I think in general, because I want to make health a priority, like that is something that I want to track, but I also haven't really noticed like a huge difference in my trading based on whether or not I've gotten a lot of sleep. There's nights where I get 3 hours of sleep and I have one of my top 10 days of the year. And there's other days where I get 12 hours of sleep and then I have a terrible day. So for me, I think that just depends more on the market opportunity. So I don't know that that's super relevant to put in a trade review, but I think it can be helpful just to track and keep yourself accountable, because overall, if your health starts declining, you can't really trade as well anymore because the stress from the job and everything just takes you out. And I know that from experience. So it's worth tracking, even if not on a trade review basis, just for a personal improvement basis.
Yeah, I mean, I tick it off like on my DRC, like I'll tick like whether I had a nice bath, whether I try and do. I obviously have a different schedule to you guys, like trading mainly the afternoon. It's like whether I went to the gym in the morning or anything like that. I mean, I don't know. I'm just ticking it. I haven't really found. I definitely feel like achieving something in the morning does help me when it comes to the afternoon. I feel like I achieved something already with the day, and I think that can provide me with some focus. That's just something I do, but like I said, I don't know. I mean, I don't know. I have like an ice bath nearly every morning. Does it help me at all? Honestly, I got no idea. Someone's probably, like I said, when I get to 80, someone's probably going to laugh at me, saying, "Why did you bother doing that the whole time?" But we'll find out one day. Just want to touch on, obviously, you mentioned Evernote, you've mentioned Excel. Oh, actually, firstly on that, the point I wanted to make actually about just as you two chatted through how you obviously go about your reviews. I think one of the most powerful things actually is how it's quite simple, and that's powerful to me. It's not like it's a complex process. Like it's David. It sounds like you open up Evernote and you just, what did I do well today? What did I do poorly today? What can I do better next time? It doesn't need to be like you said earlier. It doesn't need to be this hour-long process or whatever. It's just quite simple. And I think that's amazing. And I think that should be even more reason for people to review. Next up, so I wanted to talk about software. You mentioned Evernote, you mentioned Excel. Is there anything outside of that? TraderSync, TraderView, anything like that you find helpful?
I do like using both. I like in conjunction with my Excel having some kind of the other online trade reviewer, so to speak. Yeah. So if it's like TraderSync, if it's Profitly, if it's Kinfo, or if it's TradeZilla, I think is another popular one. I do like having a secondary one. Not so much in the sense that I need it, but just in the sense that like, to remove some of the complexity. It's like, yeah, if I want to find a very specific stat in my Excel, it might take me a few minutes or maybe sometimes a couple hours to like, conjure up the data to like make it look and show what I'm trying to find, versus Kinfo has a whole page of like just, oh, you want to know how many times or how profitable you are on certain days of the week? Boom. You want to know how profitable you are in this time zone? Boom. So there is that. However, the one point that Huddy actually brought up to me, which I never even thought about, which is a reason why he likes my Excel sheet more than more than Kinfo is that with your own journal, whether it's Excel, Evernote, whatever, it gets you to actually have to do it, right? Versus Kinvo, which is great to have, but once you link your brokers, your trades get uploaded overnight, and if you never look, you don't have to. It's already all there. So there's a sense of like, no matter what you do, make sure there's still that conscious effort of you actually putting in some kind of work, because it could be sometimes just that too easy of trades have been uploaded and then you just go on here with your life and then you never actually look at them. But I do either way. I like it. And that's kind of why I like both. I like the simplicity of one, but then I like to make sure I'm actually doing the work, in the other.
Yeah, that's a great point. David, any thoughts? Anything to add to that?
I like using Kinfo. I don't use that on like a daily basis, but I think for like longer term reviews, whether that's, end of month reviews, end of quarter reviews, end of year reviews, just to go back and look and see, what your biggest trades were, worst trades were, what he was talking about with what days you perform best. Time of day doesn't really work super well for me on Kinfo because certain brokers, when they upload like all the trades are at the same time. Some brokers, it actually does show the time that you got in and out, but that one doesn't work. But I think that's helpful. I used that when I was doing my 2024 review. So just having it all in one place and seeing different ways to organize it is definitely makes my job easier. And then I can go in and pick trades out of that and then go back and review those trade reviews that I already did on those days and then get like an even more in-depth review. I don't know any other word.
Yeah. And just touching on, obviously, you've got your Evernote, David, and Carl, you've got your Excel. Were they pretty simple to create and start up? Is there any complexity to those?
No, I got my idea first started from Michael Good. He has a blog post. I think he made the blog post in like 2009, 2011, sometimes like well over 10 plus years ago. And if anyone Googles how to track your trades, his last name, which is Goode, so how to track your trades good, his blog post is still there. And he's got like a 15-minute video of how he does it in Excel. And it's very similar to mine because that was the blueprint for what got me started on just like, the date, the ticker, the exchange, was it long or short? What broker was it? Like just the very simple things in a simple row of Excel day or Excel cells. And you just get that started. You get that ball rolling, and over time you'll add things to it that you want. You'll take away things that you don't think are meaningful, and just getting started is half the battle on figuring how you want to journal that best works for you.
Yeah. And David, I mean, Evernote's probably one of the most simple things, some of the simple pieces of software to use, I think.
Yeah, I actually had an issue with it, but I think that was just user error. I had an issue having like a business account versus a personal account. Trying to like, share with different people and collaborate on a database. But honestly, I think it's just easier if you take personal responsibility for it and upload all the stuff on your own. Because if you try to do it like in conjunction with someone, it's just too easy to be like, oh, they're going to upload that stuff. I'm going to not do it. And then, time goes by and you didn't upload the stuff and they didn't upload the stuff. So just get the personal account if you want to do Evernote and take responsibility for it.
Yeah, I mean, I use Evernote as well, and it's one of the few things I actually subscribe to and actively pay for on a monthly basis. I just think it's incredibly useful, and it's just somewhere where I feel like I can vent. And what I love about Evernote as well is like the tagging feature as well, that you can tag each page, and like you can just tag the ticker or the month or whatever it is. Like you can, there's a lot of, obviously, again, there's a lot of personalization that you can do to that, but I find that really good to then draw back on information as well. And like one of the things that like I always talk about, and I think, I don't know if like might be something that you guys do as well, but like I try and break down certain periods of cycles as well. So I used to call it a black swan, but like it seems to happen so frequently now, I just call it like an outlier. So like I tried to break down some of the details of, so like MOGO on Friday, for example, I would just describe as an outlier. And then for the next few days, I would describe those trades as a post outlier. And that's just helped me, for example, I would just draw upon that experience because I go to Evernote and I can pull it up again. And I could be like, okay, these were my notes last time. Okay, you got to be more patient. Don't be aggressive around 10, whatever it is. I've left some detail to help me move forward. I don't know if there's anything that you guys perhaps think about cycles, or I don't know, maybe it's something reflective on the larger market or anything like that.
One thing that I do that's very minute, but it is in that direction of what you're saying, which is like highlighting maybe the more important trades, is that if I do break a rule or just the worst of the worst happens, like I was just not gifted with anything good out of this trade. I will highlight it in like all red. So I remember, if I'm ever scrolling through my trades, I'm like, oh, this like pops out to my face. Like, this is a red trade. Why is it? And it doesn't mean it's a red trade of a loss. It could actually be a gain, but if I broke 7 different rules and it resulted in me missing 90% of my profits, like, it could still be, highlighted red, but be a gain. It doesn't necessarily mean it was a loss or a win. Or vice versa. If I absolutely nailed a trade, like I did everything correctly, I made the best trade plan, sized perfectly, graded it correctly, and then it played out exactly like I thought. Like I just foresaw the future. I'll hide it in green, so that I can go back and look at those trades that I just was in the zone, right? That I just absolutely nailed. So when I go back, I can review those maybe polarizing trades on the bad or the good side of things. So
No, that's a great idea. That is I'm going to incorporate that as well. David, anything that you do that you think is a little bit different, a little bit unique, or just standard?
I feel like most of the stuff I do is pretty standard. Yeah, I like that idea though that you mentioned about incorporating specifically like post outlier moves in the market cycle, because that's something that I've heard a lot of great traders talk about. Like, when you get one of those crazy parabolic runners, sometimes you get a lot of crazy gappers the next few days, and there's a ton of range and a ton of opportunities, and it's like a different style of market. And if you come in not prepared for that and not having reviewed that stuff in the past, what that played out like, you might get bulldozed over. So honestly, like, I know that happens, but I haven't really been super methodical in evernoting that. So that's something that I can definitely do a better job about moving forward.
Yeah, for me, I just remember, like, I remember that obviously you get that ticker that tends to bulldoze people, and like I'm usually like, I am usually getting bulldozed. But it's just something that, like, I've reflected on, that like I know then the next day that you can be more aggressive with the day two, like with MOGO, for example, like this is just through my note taking, like you can be quite aggressive with that one. But if there's a new name that pops up, actually it pays to be that little bit more patient, just because the range is going to be pretty crazy. And then it's the same, like, like, because obviously we had MOGO. I forget what we had on Monday. We had YY AI and something else. But then Tuesday, for example, we had WAFU. And it's the same, like, it goes from like opens at 3 something and tops at 7. And I just been there so many times where I'm just getting like chopped up on that front side before actually what tends to be one of the cleanest fades of the year. So I think a lot of it's just through getting ran over. But I've just found, for me, like, trying to be as granular with some of those details is it's really helped. And I also think, like, drawing upon some of those notes as well, like that's what I love about Evernote. It's quite easy then to just draw back at those certain periods of trading or those certain cycles. So yeah, well, yeah, I'm happy to contribute in the review chat, especially with
that's the idea, man.
Yeah, especially with two greats like yourself. So just to finish up, perhaps hopefully these are some quick fire questions. But David, how often should traders conduct reviews?
I think there's many different time frames of reviews that you should do. I think you should do at least some sort of review daily, even if it's very cursory, and then over the broader time scales, go more in depth on stuff. So I do a daily review, and any great opportunities, I go in depth, and then I do like a monthly review, and then quarterly and yearly reviews.
And what do you do if you miss a trade as well that would fall under your setup, or if it's something that you want to playbook moving forward? Will you still review it in decent detail?
Yeah, I actually have an Evernote called like biggest fumbles.
Oh, yeah. I just tag mine as miss. It's like, I don't want to be putting anything in. I don't want to be using that tag very often. Put it that way.
Yeah.
And Carl, would you say similar, like daily?
Yeah, I'll do a very quick daily review that's maybe 15 to 25 minutes long, and then on either a Saturday or Sunday. It's usually Saturday mornings, but obviously if I'm ever busy, I'll move it to Sunday. I'll do like an hour, not a year, I was supposed to say year long. I'll do an hour long review of the week, and then of course I do a more monthly in depth review. And then I'll do, and it helps me making those recaps I then post on my YouTube channel. Like that's almost kind of my excuse to review in a video format that way.
Yeah.
And then I don't necessarily do a quarterly view, but I will do a yearly at the end of the year, just see how the year turned out and that kind of thing. So, but then in terms of missed trades, I will say earlier on in my career I would track missed trades, but I don't know, last couple of few years I haven't. The only time I would track it is if like missing one trade affected me on another trade. So like if I traded, the stock I did trade, I traded horribly, and it's because I was tilted or just upset I missed a previous one. I will write that like in the summary of like traded this poorly because of missing other XYZ ticker. But I will say I've done a poor job of maybe tracking the trades I just completely missed entirely. I don't have a section for that, so maybe I should probably.
Well, no,
add that
to
one.
be honest, it just sounds like you're such a legend that you don't miss trades. So
No, I missed.
That's all, man.
It sounds a bit like
missed one yesterday, and it's left some money on the table, all the money on the table. Would have been a good winner. So
yeah, I mean, it's definitely one of the frustrations. But I also feel like actually that's a way to vent some of the frustration as well into the review of that ticker. Like at least then you can take something productive from it, which. I mean, when you left money on the table, that I suppose it's still frustrating, but it just helps dent that. I think we're about to lose you, Kyle. I think your internet's going, so I think this might be a great spot to wrap it up. I don't know if you've got any like parting thoughts. Like I think it just goes back to my original message that I don't know, like you said it better than me, Kyle. Like I don't know many great traders that don't review in decent detail. And I think like another takeaway is as well for me, it doesn't have to be like a complicated process. Half an hour a day with a weekly review. I mean, that's as long as you're using that time effectively and using it well, I think that's pretty effective. I don't know if either of you want any closing thoughts that perhaps will inspire everyone watching to purchase Evernote or start in an Excel spreadsheet.
I will. I'll end with my final thoughts with how you started from Tim Grover, because I like Tim Grover a lot too. I think this is from him. I might be butchering it. It's not from him, but there's a quote that says, "Hard work beats talent when talent fails to work hard." Like it's easy to look at maybe me or David or any trader you look up to and think, oh, they're so talented and oh, they're just so good. And sure, that might be true, but the reality is there is hundreds, if not thousands of hours of work behind what we have done or will continue to do. And that's the work we're talking about, is the reviewing. That is a massive portion of it. So it's not like we just made these millions on pure luck and just skill. Like it was developed over many years. And that's the work that we're actively still doing. Cause I think, the how we got here is that way. And so we don't know any different, and we want to keep it that way. So.
Yeah. Well said. David, anything to wrap it up?
I think you just got to develop a love for the game and learn to enjoy the review process. And for me, it's kind of like a puzzle. I love going through everything and finding out, what pieces fit together and what made something move and what I can do better. And to me, it's like I enjoy it. It's fun. It doesn't really feel like work. So if you can have it feel like that, you can be able to do that long term. And if you can review consistently for your whole career, like I feel like the sky's the limit. So
yeah, absolutely. Well said. And then just lastly, I think people will know where to find you. I think everyone watching will know where to find you guys. But just in case, Kyle, where can people find you at Clover?
Clovertrade.io is a good one. My Twitter is like Kyle_Trader C, or you type in Kyle Williams on Twitter trading, it'll pop up. And then same thing for YouTube, Kyle Williams trading. That'll pop up as well there. Those are the main spots you can find me.
David,
I am the Laptop Legend on Twitter, on Instagram, and YouTube.
And last thoughts from me, I will add that like if you don't watch Kyle's monthly wrap-ups, I mean, you got Lance retweeting them every month, and someone like that saying they're absolute gold, then I mean, if you're not, I don't know what to say to you. So yeah, on that note, have a great evening, everyone. Thank you so much for joining me. Like I said, it was just one of those topics that I really wanted to cover, and it's one of those topics that I think like a lot of people, like when they're asking me for anything, I'm like, well, just show me your reviews. And I'm like, if you haven't got them, I'm like, I don't know what you want me to do. So thank you so much. Thank you so much for your time. I really appreciate it. And
Thanks for having us, man.
all the best with Tesla tomorrow.
Yeah, right.
Right,
Thanks for having us.
Good luck on that. Thanks, man.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.